Hello, everyone. In today's live stream, we had a pretty decent session. We had quite a bit of people in. I thought it went really well, but there were technical difficulties, and I guess I didn't hit the record button hard enough, and I got started, and the recording didn't take. So I'm sorry about that for everybody that missed it, and I wasn't able to put the recording of today's live up, but I wanted to make a short video to share something that I didn't get to talk about during the live that I've been kind of thinking about for a while, and talk a little bit about some of the topics because I did talk a lot about these crossovers, which I've talked about in other videos. But basically, this is a pretty interesting topic here. When you think about it, let's say you do all your TA and the TA looks great and you think the trade's going to go in your direction, and it should, and it generally does when you backtest, but then when you enter the trade, it goes against you. Well, it's possible that the market makers or some big player can somehow see your liquidity, and so they're pushing price after you enter. They're pushing price further against you. As soon as you enter, they're going for your stop loss, is what they're going for. They're going for your liquidity, and they haven't fully reversed price yet. So think about it this way. There's like Bruce Lee, and he would dodge as well as he would hit. But then there's this guy, his guy named Lerdsila, and he wins fights a lot because people can't hit him. He dodges out of the way, he just moves out of the way, and like whenever people try to hit him, he just moves, and so he wins a lot. And think of that as your liquidity. They're coming for your liquidity. They can see it. That's how the whales fill their order. They can't fill, like, they won't run the price until they fill their order, and they hit their order blocks a couple times, and then they fill their whole order, and then they run the price. So you may say, you see a bull div forming, and you're looking for an entry. Let's say it also hit some key levels, some trend X lines, or let's say you had a CISD break here, and it went up, and then it came back down, it retraced. Well, the idea is that a bigger player might have entered in some of their order here. Who knows? They might have been buying on the bottoms on spot or something. Maybe they're preparing to fill a long order as well as buying spot and selling it to move the price in order to make their leverage trade work better for them. Say a big whale who needs to enter in where liquidity is. So if you had like a little divergence here, and you got in, but then it just kind of was a dud and it went back down. That's why it's so important to just set your stop loss at break even once you get up here, and be ready to just move your stop loss, because chances are many times it's not going to run on the first divergence. They're going to be like, let's push it down one more time, because they can see a bunch of people, like retail guys, putting orders in 10x 20x leverage or higher. They can see it, so they want to come push the price down and sell. Maybe they were holding and they sold some to push it down while they're preparing to fill their leverage trade. And so they're coming for your liquidity. Your TA was right, but like they're going to push the price down and try to force it down before they let it run. So even in this case, you had a bull div here on your RSI and your money, and but if you would have got in around here and then somehow set your stop loss at break even or a little bit above, then you wouldn't have lost anything. But if you if you entered on this crossover and then like it crossed over here below, you should exit. I would say it'd be best to exit. Just take it. Just take a little bit of profit. Chances are they're coming back down for liquidity again, and that's exactly what they did here. And then they ran it. They see you entering your trade, and they want your stop loss or whatever you got. And they're just going to increase their order size, and then they're going to run it. So that is the idea of this, to like be like the butterfly, kind of like Muhammad Ali or something, Bruce Lee or something. Just like, don't be afraid to get in and out of the trade, because I think a lot of the really good traders, their stop loss gets hit a few times. Their TA is correct, but they know that the other guys, the other traders, the big whales and stuff, they're coming for your stop loss, and they'll do it over and over again. So like in this case on Aster, it had a local bottom here, just around here, and there was a bull div um, right here, and this one played out on the hourly, but here's an example. Like here's a bull div right here that just got pushed down because they went for more liquidity, and so you'll see that, and you can't expect it to play out in your favor every time. I mean, actually, this one did, but in many cases it won't. I mean, this one actually went way up here. But when you look at this, I think it was on the 5 minute I was looking at it. You'll see this. This would have been your entry time frame. Say your higher time frame TA was good, and you're like, let's get down to the 5 minute for entry. And you had some bull dips. You had a bull div right here. Price was coming down, money flow was up. Here's your crossover, and then there was liquidity down here, and they came back and hit that liquidity. You could have got out of here at a tiny bit of profit or broke even, and expect them to come for your liquidity. If there's people trading this, there's going to be liquidity, and they're going to push the price down into a divergence or up into a divergence in the bearish scenario. So this would have been a bull div, from here, and then even on this hump, it would have been another bull div, and even here another bull div, and then here it's still a bull div, but that's the one that played out, and it reversed. And so they took liquidity 1, 2, 3 times, and there was a higher time frame liquidity here, like an hourly liquidity or something. So that is, as a matter of fact, there might have been no bull div there, but that's the point. Is the TA works. The TA works, but you're trading at a time where a lot of people are thinking that the bear market has started. A lot of retail people are out, and only like the dedicated traders are in, or maybe like, there's some retail, but not as much. And so there's not a lot of liquidity to begin with. They can move that price against you very easily with some buy and sell orders, while they're also feeling it like a leverage trade. So keep that in mind when you have a trade. Like they're gonna go for your liquidity a few times. You need to dodge, you need to get out. That's why it's important to pull your stop to break even, and then eventually, you had this one more dip, and then it went. It even tried to act like maybe like it didn't have a V shape. It even acted like it might come down again, but there was probably an order block right here, and then you had this big candle finally above this key level. So watch out for that. That's the important thing of this message. To understand that they're coming for your liquidity. Your TA is good, but they're manipulating it to get you to take your money. That's how they fill their order. With that being said, I want to add something else. It doesn't really work on the 5 minute as much because there's too much dilution and noise on the 5 minute. But when you start getting to the 15 minute and above, let's look at a different coin, because see, this one was fighting with resistance for a while, and it's not a good example. There are a couple good examples on it like this one, but I want to show something that I haven't really talked about as much. I did talk about it a little bit in the last live stream, but I just didn't explain it as well as I wanted to. if you see really high money flow or really low money flow, there's often a move on that alone without a divergence. Like there can be a move. I mean, this isn't a good example, but usually if the money flow gets down to these really oversold or overbought levels, you can often get a decent little move on the crossover on the 15-minute time frame and above. Um, there's a lot of choppiness in the markets right now. There was one, I think, um, starts with a C. I can't remember. CLO? Maybe this one. Yeah, this one. This one's got some movement. I'm surprised. Like, see how this one's just got nice movement here? Like, it's not as choppy, and then it has these swings on one of the different time frames. It's going to look really good, and it's more predictable. But what you want to look for in this idea is just look for the money flow to get really low, and then your crossover, you're usually going to get a move. It's just pretty straightforward. Right here's your entry. Maybe wait till this first candle that crosses at close. You'd enter here, but you'd still get something. In many cases, it'll be a lot better. Like here, this one's kind of deep. Sometimes they'll push it into a divergence, but I find that this one they went for liquidity again. But I find that when the money flow is like really oversold or overbought, there's a much higher probability. This one's not that high, and it played around on it, but I would look for a short on these big humps, like when the crossover happens. And this one you might have had a good move. I haven't even measured anything, but say if you entered right when this thing crossed, you'd enter around here. I mean, it went for a day. It's not that great, but you could have got out pretty quick with some nice profit on a short. So what I do now, because there's so much manipulation, you might have a super shark fin here, but instead of the price, a bullish super shark fin, instead of the price going up, it pushes down into a down, and then it starts printing divergences. But you're more likely to get a sure move when the money flow crosses. You will have this manipulation. Nothing in trading is 100%, but if you back test and you start looking around, you'll see what I mean. I think I showed Cato today in the live stream, but I'm going to try to get this video and keep it from getting too long and try to finish this up. But basically, if you get a deep money flow and it doesn't really go your way, well, chances are it's still pushing down into a divergence, and that's what was right here. And then you had a nice move. So what I do is I set my watch list alerts on. I've only got 2 alerts right now, but they'll go off anytime anything on my list, on my alts list, anything on here that has really high or low money flow will set off an alert. So how I did that is I set the for my watch list alert, I set TDIX, middle band, crossing, value, and 34 for oversold. And so when that happens, I get an alert that says, hey, the money flow is way down here at 34. It doesn't mean there's a trade entry there, but it means I should take a look at it. And so the reason I do that is because a lot of times you do have a move. Like in this case, it made a divergence again, because a lot of the market's pretty bearish right now. But if you look around and backtest this, you'll see what I mean. And these humps are almost high enough, but not high enough. You want a really nice, let's go to the 50. I think the 15-minute is ideal because you get these nice humps and money flow, and they're pretty effective on the 15-minute, at least getting some move. And this one made a divergence. But yeah, I wanted to share that because like on this one, you had really high money flow, and then you had your crossover. It pushed into a divergence, but then it went down. And so it seems the money flow can cut out a lot of the noise. Now, in this case, it kept pushing into a divergence. So that would have been annoying. But here's a good example. And if you look, you'll see what I mean if you backtest. When the money flows really deep, when it crosses over, you could just enter sometimes. It's a risk, but you will sometimes get really nice moves, and it's easy. If I set my watch list alert to super shark fins, I'll just get a lot of alerts, and it's just too many alerts. But when I set it on money flow only, I'll just get less alerts, but they'll be, you know, really oversold or overbought things. Times when, even this one's like a deep money flow crossover and you had a move. This one didn't really have a good move. It pushed down again, and there's your money flow divergence. And then it went up, and that was a really nice move at that point. So having the alert set for deep or high money flow can aware you to money flow divergences way early, like on the first big hump. Same with like this one. The money flow got up high. I would have got an alert up here. And in this case, I missed the crossover by the time it got up to where my alert would have went off. If it was set, I think I mine's at 66, not 65. But that might have not have went off on that one. Yeah, so on the overbought one, I've got it set for 66. And I did this through a little back testing to kind of see how deep or how high the money flow needs to be before you're very likely to get a good move on the 15-minute. And as you can see with the big watch list, I get plenty of these on my alerts, like saying, okay, the money flow is really high or really low on something, and that's it. Like, you will get a nice alert here and say, okay, you could enter here. Maybe it came back up and checked this supply zone right here. Could have been an entry, and then you had a nice short right here. Well, it didn't go your way the first time, but then it put in an RSI divergence, and it did. So you kind of want to stick and move. But yeah, that's that. I think it's an interesting idea for using your watch list alerts. I wouldn't say to base your trades on divergences only. You want to use other TA. Obviously, check your key levels, check your Trendex levels, your Fibonacci's, check all your confluence. Is it at a fair value gap? But the money flow can help you a lot. That's for certain. And, if you have a lot of ups and downs of the crossover on the money flow, all around this there's a lot of noise around the 50 line. But you avoid that by only messing with the big humps of money flow. Let's just say that it increases your chances to get a nice move, a bigger move than something that's smaller. So yeah, that's it. That's the message. I tried to keep it as short as I could, but that's how it is. Have a great day. Happy trading.